Joining us now, though, is Michael Saylor, MicroStrategy Executive Chairman and co-founder. Michael, it's great to have you on the show.
Yeah, thanks for having me, Morgan.
I do want to start right there with the regulatory landscape. The fact that Coinbase is now filing a petition in federal appeals court requesting review of the decision by the SEC. Is this the type of situation that could impact Bitcoin or impact the type of work you're doing at MicroStrategy?
No, there's a lot of uncertainty around the rest of the crypto ecosystem, but the one certain element of the ecosystem is Bitcoin is universally acclaimed to be a global commodity or an asset without an issuer. Mm-hmm. So the one thing we can count on is Bitcoin goes forward in the year 2024, and a strategy built around Bitcoin is generally a pretty safe one for institutions.
New rules, speaking of regulations, recently announced by the Financial Accounting Standards Board, the FASB, that are going to require companies to account for cryptocurrencies like Bitcoin at fair value. Set to go into effect, these rules, in the next year or so, but companies can begin to apply them earlier than that. How is that going to affect MicroStrategy?
You know, we welcome fair value accounting. It's going to create much more transparency and clarity in P&Ls and balance sheets for any companies that are holding Bitcoin. I think the real significance is that there are companies like Berkshire Hathaway and Apple Computer that have $100 billion plus in cash. And right now they have to invest it in treasuries and sovereign debt. And with this change in fair value accounting, you're going to have a commodity that's valued as fair value, and it becomes a legitimate treasury reserve asset for publicly traded companies.
Yeah, and we've had that conversation before on the potential for more adoption, although I suspect Berkshire Hathaway is probably not going to be on that list of companies looking to adopt based on commentary there. I do want to get your thoughts, though, on Bitcoin and the rally we've seen just in the last 2 months or so, since early October, up something like 56%. What do you attribute that rally to?
You know, we're going through a digital transformation of everything. Apple represents a digital transformation of telephones and cameras, and Google's the transformation of books and libraries. Bitcoin represents the digital transformation of capital. 99.9% of the capital in the world is tied up in real estate and stocks and precious metals and bonds. And so we're 0.1% transformed. People, as they get educated on digital assets, are realizing that they ought to be allocating more and more of their capital to this digital asset. And so they're moving from 0.1 to 0.2%. And I think that's really driving the trend. I've said before, if Bitcoin's not going to zero, it's going to 1 million. The real question is it legitimate asset? If it's a legitimate institutional asset, everybody is underallocated to it.
So along those lines, how much is the possibility of a Bitcoin spot ETF contributing to this recent rally? Geopolitics, risk-on rally that we've seen more broadly across markets amid the Fed pivot, and also next year's halving. Are all of these factors that are contributing?
They're all factors. Education makes a difference. Institutional adoption makes a difference. The spot ETF news is good news. Loosening of monetary policy is good news. Inflation anywhere in the world drives Bitcoin adoption. And of course, the halving is going to cut the available supply of Bitcoins for sale in half from the miners. And so we've got a confluence of very bullish milestones over the next 6 months. And I think smart money is investing into that ahead of it.
I do wonder what you think about the centralization of mining, though, and whether you're concerned, since so much of the crypto community does seem to be flagging it right now.
You know, people focus upon mining pools, but the actual mining is taking place in Bhutan and in Argentina and South America and Texas and Europe and Iceland and Africa, everywhere in the world. And so the miners themselves are very decentralized. They'll remain decentralized because they're chasing after power that's effectively marginally free. And the pools, they will accumulate hash rate from time to time, but they don't really have the power. The power is sitting next to a geothermal or a hydroelectric project somewhere in the world.